Welcome, candidates. I'm your examiner, and today we're unlocking the exact requirements you need to snag that A-star grade in this explainer on partnership capital and current accounts. Look, if you're prepping for the IGCSE 0452 paper, you already know this module is an absolute beast, right? It's critical. But we aren't just going to sit here and look at standard run-of-the-mill bookkeeping. No way. We're going to elevate your understanding from basic data entry to real, high-level financial intelligence. I'm going to give you the exact strategies to secure those top marks.
Okay, let's just dive right into this with a massive warning straight from the 2024 and 2025 Principal Examiner reports. It is absolutely heartbreaking to see a brilliant student, someone who really knows their stuff, lose marks simply because their handwriting in a ledger account was a totally illegible mess. Or maybe they rushed and carelessly confused a revenue expense with a capital expenditure. This right here, it proves that achieving an A-star isn't just about knowing the math, it's about absolute precision, clarity, and frankly, ironclad discipline under exam pressure.
So to get you to that level of precision, here is today's masterclass syllabus. First up, we've got the A-star foundation, then T-account execution, followed by AI and modern ledgers, analyzing liquidity, and finally, the pitfall checklist.
All right, Section 1. The A-star Foundation, 2026 Syllabus and Core Principles. Now, I want you to really focus on the shift to modern international terminology. The days of using that older phrasing, completely over. If you write bad debts on your paper, you are instantly in the danger zone. You really must use the term irrecoverable debts. And instead of just jotting down capital, you've got to be precise. Use owner's equity. The examiners are looking for literally 100% accuracy on this. It's not just a friendly suggestion, it's a strict requirement if you want to avoid those immediate, totally unnecessary penalties. You absolutely have to speak the modern language of finance.
To survive the intense pressure of the exam room, I want you to lock this mnemonic into your brain right now. ALE, always log everything. It perfectly mirrors the core accounting equation. Assets equals liabilities plus equity. Oh, and remember your capital formula extension too. Opening capital plus profit minus drawings equals your closing capital. In every single partnership account you balance, these equations absolutely must be maintained at all times during the fiscal period. If you ever, feel lost mid-question and start to panic, just go back to ALE. Always log everything and make sure your equation actually balances. Now, beyond the math, you must demonstrate a really deep understanding of these four pillars. You need to grasp the duality of every transaction and strictly apply the business entity concept. But let's focus on that top one for a second, because this is where students just constantly fall into the trap of overstating profits, prudence. Listen, ignoring potential losses completely violates the prudence concept. Doing that destroys the financial transparency that banks, owners, and tax authorities rely upon for their annual decision-making. You just can't do it.
Moving on to Section 2, T-account execution, securing the method marks.
So the technical execution of partnership capital and current accounts requires a really strict methodological step-by-step approach. It's like a recipe. You start by identifying the source document, you move that data to the books of prime entry, and finally, you construct your T accounts. And here's a huge tip. Examiners award method marks if this logical flow is clearly visible on your paper. Honestly, even if your final trial balance is a mess because you hit the wrong button on your calculator, showing your workings and clearly distinguishing between your balance brought down and your balance carried down will literally save your grade. I can't stress that enough. But of course, we're aiming for 100% accuracy here. As examiners, we constantly see students trip up mathematically on these specific areas. Before you even think about constructing the final financial statements, you really need to double-check your mathematical workings on these. Miscalculating the percentages for trade discounts versus cash discounts, incredibly common. And if you're dealing with manufacturing accounts, forgetting your state symbols is just such an easy way to throw away points. Keep a razor-sharp eye on these details, guys.
Let's look at Section 3, AI and modern ledgers, zero and real-world automation. Okay, let's take a step back from the exam for a second. In the exam room, yes, you must manually execute the double-entry system. You're physically writing out those brought-down and carried-down balances. But out in the real world, AI-driven accounting software like Xero automates the duality of every transaction and handles those really complex partnership adjustments instantly. It's wild. But here's the thing. By mastering the manual process now, you're actually learning the deep underlying logic that these powerful AI algorithms are built upon.
All right, Section 4. Analyzing liquidity, the AO3 evaluation marks. Let's set up a quick scenario. Imagine you've done all the hard math, sweating over the calculator, and your calculation reveals that the partnership's current ratio has plummeted from a super healthy 2.5 to 1 all the way down to a 1.1 to 1. Now, an average student, they just write down 1.1 to 1 and move on to the next question. But an A-star student, they stop and they analyze exactly what this severe drop in liquidity actually means for the business.
To secure those top-tier AO3 evaluation marks, you've got to act like a professional auditor. You need to ask and answer those high-level questions to explain exactly why the business's liquidity is failing. Like, has the partnership overpurchased inventory that's now just sitting, gathering dust in a warehouse? Are trade payables being settled far too slowly, which is damaging supplier relationships? Or maybe cash reserves have been heavily depleted because of some massive, sudden capital expenditure. You absolutely must provide the why behind the numbers.
And while you're providing that evaluation, especially if you're asked to do an inter-firm comparison, you really need to watch out for tricky traps. Differing accounting policies make direct, surface-level comparisons highly unreliable. It's like comparing apples and oranges. For example, if firm A uses straight-line depreciation and firm B uses the reducing balance method, well, their asset valuations and profit margins are going to look completely different, even if their actual real-world business performance is identical. So always point out these differing policies in your written evaluations.
And finally, Section 5, the Pitfall Checklist, Surviving the 0452 paper. Okay, here is your ultimate survival checklist. First off, do not submit poor, rushed handwriting. Seriously, if the examiner can't read your T account, they literally cannot award you method marks. It's that simple. Next, do clearly distinguish between revenue and capital items. Misclassifying these, it completely breaks the accounting equation. And finally, do manage your time according to the question's weightage. Please don't spend 20 minutes agonizing over a simple 2-mark calculation while rushing through an 8-mark AO3 evaluation. It's just not worth it.
I'm going to leave you with this final, provocative thought to take into your studies. We spend so much time balancing T accounts and calculating ratios. But what is the true quality of a business's profit? I mean, if our meticulous accounting records don't capture vital non-financial factors, like, say, highly toxic staff morale, an outdated retail location, or a failing market reputation, how do we truly measure long-term sustainability and return on capital employed? Remember, the numbers always tell a story, but as top-tier accounting students, it's your job to read between the lines. Keep practicing, keep your handwriting clean, and always log everything.